News that could change the financial landscape. The Federal Reserve has just canceled its planned interest rate cuts for 2025. What does this mean for the economy, your investments, and your wallet? Stick around as we break it all down in simple terms and explore what's next for you and the markets. Hello, and welcome to our channel. Today's news is nothing short of a game changer. The Federal Reserve has officially announced it will not proceed with the anticipated interest rate cuts in 2025. This decision has sent shockwaves through financial markets and could have far-reaching consequences for businesses, breaking individuals, and the global economy. In today's video, we'll explain why the Fed made this decision, what it means for you, and how to prepare for the road ahead. What was expected? For months, economists and investors were gearing up for a series of interest rate cuts in 2025. The expectation was that these cuts would stimulate economic growth, ease borrowing costs, and provide relief to businesses and consumers. Many were optimistic about a more favorable financial environment as inflation seemed to be under control and the economy was stabilizing. But with this announcement, those expectations have been completely upended. Why did the Fed cancel the rate cuts? So why the sudden change in plans? According to the Federal Reserve, there are a few key reasons. Inflation concerns. Despite progress, inflation remains above the Fed's 2% target. Cutting rates too soon could reignite price increases. Labor market strength. The job market continues to show resilience, with low unemployment and rising wages, which could add inflationary pressures. Global uncertainty. From geopolitical tensions to shifting global markets, the Fed is opting for caution rather than risk fueling instability. Ultimately, the Fed's decision reflects its mandate to balance inflation control and economic growth. What does this mean for you? Now, let's talk about how this decision impacts you. For borrowers, higher interest rates mean loans, whether for homes, cars, or businesses, will remain expensive. It's crucial to plan your finances accordingly. For savers, on the flip side, higher rates are great news for savers, as bank accounts and fixed income investments like bonds will continue offering better returns. For investors, the stock market might face volatility as companies deal with higher borrowing costs, but sectors like banking and energy could benefit. Diversifying your portfolio is key. For homebuyers, if you're considering buying property, brace yourself for elevated mortgage rates that could stretch your budget. How to prepare for 2025. Here are 3 steps you can take to prepare. Review your debt. Consider paying off high-interest loans or refinancing to lock in current rates before they rise further. Build an emergency fund. With economic uncertainty, having a safety net is more important than ever. Re-evaluate investments. Talk to a financial advisor about adjusting your portfolio to minimize risk and capitalize on opportunities in a high-rate environment. Staying informed and proactive is the best way to navigate this shifting financial landscape. This decision by the Federal Reserve is a reminder of just how dynamic and unpredictable the economy can be. While the cancellation of rate cuts poses challenges, it also creates opportunities if you know how to position yourself. We hope this video has helped you understand what's happening and how you can prepare for the future. If you found this video valuable, don't forget to like, share, and subscribe for more updates and insights. Thanks for watching.